This is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, I want to talk to you about retirement savings alternatives and tax savings alternatives. You know, a lot of you have reached out saying, Chuck, what are the alternatives? Right? I'm in kind of this traditional 60-40 or traditional brokerage account with all those you see on TV. And Fidelity just reported this past week that the average retirement account plunged, in their wording, last year 22.9%, almost a quarter of what people have worked so hard to save. Gone. And understand you need about a 30% return, right, to get back to even. In fact, the statistics are, which I'll talk about this Tuesday at retirementprotected.com for those of you who like to learn these alternatives, and I would encourage you to learn these sooner rather than later, is if you're down 25%, like a lot of you we've met, and let's say you're in retirement and you're now taking, let's say, 5% out of your account, you've now negatively sequenced your account 30%. The market did 25 of it, you punished it another 5. You're now down 30%. Well, when you're down 30%, you need almost a 43% return just to get back to even. Folks, the time to look at alternatives and to learn these alternatives is now. Now, these are strategies I'll teach you Tuesday that have been alternatives that our family and a number of our client families have used for years. They're not panicked when you see what went on last year, what we saw in 2008 and 9. And a lot of those things, there was a lot of things to panic over, but watching their accounts supposedly plunge was not one of them. Now, here's the good news. You can, institutional money management, I talk about this Tuesday, this is where you can dictate your risk. So you can still be in the market, but you can dictate the risk you choose to take in the market. Very different from traditional, brokerage investing. Right? They put you into funds and then you just kind of hang on, hope, and pray. Here, it's proactively managed and very, very tax efficient. The other I'll teach you is indexing. And indexing is where you can have upside without downside. That's been a huge alternative, especially for those clients that needed income in a down year. They didn't worry about taking money out of an account that was down. They could take money out of an account that can't go down. And not only can it not go down, but now as the market's recovering, they can make up for lost time and lost money that much faster because they can get 115, 110, 220% or whatever, let's say some of these exchange traded funds that you and I could just buy in the market, we can actually have just linked to the market. So we only have upside, not downside. That's been a huge, huge alternative savings peace of mind for our clients. I'll teach you that this coming Tuesday. The other is tax alternative, right? Because a lot of people are saying, well, Chuck, I kind of get the same old story about taxes. I ask about taxes. I hear you say that they're predictable, but it's more predictable that someone just kind of tells us that taxes are just part of the equation, or they tell us to go see a tax professional. The tax professional says, well, go see the financial planner, and the two are pointing fingers at each other, and it's really just tax accounting. I hear that time and time again, and I went through that same misery myself. And a lot of times, until you go through these pain points, until you take the initiative to find that alternative, unfortunately, you just get the same thing over again and again and again. Our clients have been able to find how to save tax. One of those strategies I'll teach you this Tuesday, which would help a huge number of clients this past year, created just in the prior year and this past year a deduction between 75 and 80%. In fact, 2 years ago it was 80.8%. It provided just last year an over 18% yield. This is not in the stock market, folks. This is non-correlated to the stock market. In fact, this has been proven that by having not everything in the stock market actually gives an overall better return, and that was done through a Morningstar study that I'll teach you this coming Tuesday. Well, not only did it provide an 18% yield, it actually created an 80% deduction, all in the same type of an account. That account, because of that deduction, many of our clients used to lower their taxes. Most of them used it to move their IRA to Roth IRA, so that they could use the deduction. And the deductions can vary. It depends on the type of fund. It can be anywhere from 20, 40, 60, 80%. But overall, you get a 100% deduction over the life of the fund. Well, this is an alternative to normal taxes. So I want to talk to you and teach you Tuesday why having an alternative to your taxes. So it's more of tax planning, teaching how much less you have to pay with strategies that have been around and are IRS approved for decades, and alternatives to retirement savings so that you can have upside without downside, or you can dictate your risk, or you can take advantage of things that are outside of Wall Street, right, as alternatives to just traditional retirement planning. So alternatives to retirement taxes and alternatives to retirement savings, let me teach you. Go to retirementprotected.com. That's retirementprotected.com, and learn where your alternatives to saving you taxes in retirement savings can be in 2023. Retirementprotected.com, retirementprotected.com.